What happens when the climate change crusade smacks head-on into a corporate profit statement? The century-old giants of the auto world collectively slam on the brakes and throw it into reverse. What you thought was an environmental revolution was actually just a calculated game of risk played by capitalists. And right now, the house is losing. Lately, the automotive world has been serving up a drama worthy of a standing ovation, a real masterclass in eating your own words. The stars of the show? None other than the old European aristocrats of industry, the very same ones who once hoisted the flag of electrification so high they could hardly wait to toss the internal combustion engine into a museum. And guess what? Now you can find them caressing the hoods of their gas-powered cars, their eyes filled with tenderness usually reserved for a first love. BMW's engine chief, Frank Weber, even shouted what has become the politically incorrect truth of the year. The internal combustion engine is our foundation. Let me translate that from corporate speak into plain English for you. This whole EV thing, it's burning cash so fast, it's giving our corporate liver, spleen, and kidneys a panic attack. For the foreseeable future, we need our old, reliable, gas-guzzling friend to keep paying the bills and transfusing blood into the system. The numbers don't lie. BMW Group's Q1 2024 financial report shows in stark black and white that its traditional fuel-powered cars contributed a staggering 78% of the group's net profit. Meanwhile, the electric vehicle division has racked up a cumulative loss of over 4.5 billion euros in the last 3 years. One isn't a foundation, it's a cash cow. The other, it's a gold-plated furnace swallowing money whole. Audi's performance was even more theatrical. Their former CEO, Markus Duesmann, had made a solemn vow to cease all global sales of combustion engine cars by 2033, a sacred promise. Yet the moment new boss Gernot Dollner took the throne, he promptly plucked that flag from the ground. He just casually announced, we're not setting a specific end date anymore, we'll just see what the market wants. But wait, there's more. In a stunning reversal, he then declared that from 2024 to 2026, Audi would launch more than 20 brand new combustion and plug-in hybrid models. Their principles changed faster than a face in a Sichuan opera. Turns out that 2033 pledge had a shorter shelf life than a carton of fresh milk. And the market? It ate it up. The news sent the stock of Audi's parent company, Volkswagen Group, soaring by 3.2%. Investors voted with their wallets, and they voted for pragmatism. Even the old patriarch Mercedes-Benz couldn't keep a straight face. Remember 2021? CEO Ola Källenius, brimming with confidence, declared a heroic goal of full electrification in major markets by 2030. What ambition, what vision! Fast forward to a financial meeting in February 2024. Mr. Källenius clears his throat. Yes, about that goal of 50% EV sales by 2025, we might need to slow that down a bit. But the real kicker, he announced that Mercedes would continue to update its internal combustion engine product line for the next decade. The official line was a masterpiece of PR, strategic focus, tactical flexibility. The real meaning? Friends, the promises we made were a little ambitious. We need to get our feet back on the ground. The brutal reality is this. Global sales of the Mercedes all-electric EQ series plummeted by 32% year-over-year in the first half of 2024. In China, their flagship electric sedan, the EQS, was being offered at a 40% discount and still couldn't find buyers. In stark contrast, their gas-powered flagship, the S-Class, maintains a rock-solid profit of 11,000 euros. That's about 86,000 RMB per car. The profit from a single S-Class can basically cover the entire manufacturing cost of 2 entry-level EVs. Over at Volvo, the story is even more tragic. They once made the resolute cry to become an all-electric brand by 2030. Now they've had to walk it back to, by 2030, over 90% will be plug-in hybrids or pure electric. This strategic retreat came with swift, brutal action. 3,000 layoffs globally. The Shanghai Research Center was hit the hardest, with waves of engineers receiving their graduation notices. The only silver lining was a decent severance package, but the calculation behind the layoffs was chillingly precise. Volvo estimates this move will save about 350 million euros in annual operating costs, which just so happens to cover about 70% of the budget increase needed for their 2025 battery procurement. The abacus of the capitalist clicks and clacks, and every bead is accounted for. And what about Porsche and Bentley, the players at the very peak of the pyramid? They've elevated pragmatism to a new art form. Porsche simply tossed its aggressive goal of 80% EV sales by 2030 into the trash, admitting the pace was far too fast. Bentley quietly pushed its finish line for full electrification from 2030 all the way to 2035. Bentley's CTO, a man whose name is long enough to be a login password, Dr. Frank Stefan Walliser, explained it with perfect conviction. Global demand from our esteemed clients for the plug-in hybrid Bentley has far exceeded our expectations. The market data proves the whims of the rich. In China, the Porsche Cayenne H Hybrid, despite costing almost 400,000 RMB more than its gas-powered version, has a long waiting list. Meanwhile, the all-electric Taycan had an inventory turnover period of 92 days at one point, nearly triple that of the gas-powered 911. The world of the rich is beautifully simple. They want the green badge for show, but they still demand the roar of a V8 for the road. So, the billion-dollar question: why are all these century-old institutions performing this collective high-speed U-turn? Because the beads on the abacus finally flew off and hit them in the face, and it hurts. Just look at what they're facing in their single largest market, China. In the first half of 2025, BMW sales in China reached only 317,900 units, a staggering 15.5% year-over-year drop. This marks the first time in nearly 30 years they've seen 5 consecutive quarters of double-digit decline. Porsche fared even worse. In the first half of 2025, they sold less than 15,000 cars in China, a catastrophic 28% drop, a sales figure that would give any sales director an on-the-spot aneurysm. Porsche's CEO, Oliver Blume, delivered an explanation that was a masterclass in shifting blame. Chinese consumer demands are changing too quickly. We haven't kept pace. The subtext screams from the page. It's all the fault of BYD, NIO, and Li Auto. These price war butchers who refuse to play by the old rules have flipped the entire table over. The industry data is even more damning. From January to June 2025, in China's premium EV market, cars over 300,000 RMB, the 3 new guard players of NIO, Li Auto, and AITO jointly devoured 62% of the market share. Meanwhile, the combined sales of all-electric cars from the German BBA trio, BMW, Benz, and Audi, were so low they were being mocked by the upstart Xiaomi. The popular saying on the Chinese internet says it all: if you can't handle the drink, go sit at the kids' table. When you can spend around 300,000 RMB and get a NIO ET7 fully loaded with LiDAR, orange chips, and air suspension, who in their right mind would spend over twice that on an electric BMW whose smart features might be worse than a 100,000 RMB domestic car? And so, a truly bizarre scene unfolds. Globally, these giants are desperately trying to prolong the life of the combustion engine, giving it CPR and adrenaline shots. But back in China, they are practically on their knees, begging to accelerate their own electrification. Audi is smashing 20 billion RMB in cash to build a dedicated EV factory in Changchun. More radically, they jumped into bed with Huawei back in 2019, deeply integrating Huawei's Shangkun smart driving system into their Q6L e-tron. Their marketing slogan? A luxury brand plus Huawei's world #1 automotive tech. This is like the head abbot of the Shaolin Temple enrolling in a crash course for internet product managers. You take the foundation of traditional martial arts and you slap on the mindset of Silicon Valley. If you can't beat them, you don't just join them, you call them daddy. BMW's split personality is on full display in its pricing. The all-electric i3, once priced north of 400,000 RMB, can now be had for around 250,000 after discounts. It's been cut in half. Mercedes EQ series is even more desperate. The main models, the EQE and EQ SUV, are commonly advertised with fire sale discounts of 20 to 30% off. It looks like a luxury boutique's end-of-season clearance sale. German engineering, originally 500,000, now only 250,000. Step right up, don't miss out. But Chinese consumers have developed eagle eyes. They pull out their phones, do a quick search, and see the Zeekr 007 next door. 800-volt architecture, a Snapdragon 8295 chip, LiDAR, and the base model starts at just 229,990 RMB. So, you're trying to sell me your old platform, retrofitted for electric, and call it a new car? Who do you think you're kidding? Of course, the torture of the profit margin is the fundamental driver of it all. The consulting firm J.D. Power calculated that it costs legacy giants, on average, 18% more to build a mid-size EV than their Chinese counterparts. So where does all that money go? First, labor. A unionized German auto worker costs 72 euros per hour. A worker in a Huawei factory? About 9 euros. That's 8 times the cost. Second, distribution. The traditional dealership model skins off about 15% of a car's price in channel profit. Finally, legacy baggage. A company like Volkswagen Group has over 200,000 retired employees, and their pension payments eat up 3% of the company's total revenue. These costs are ultimately baked into the price of every single car. No wonder analysts estimate that for every Mercedes EQE they sell, the company loses nearly 5,000 euros, about 39,000 RMB. But for every gas-powered S-Class they sell, the profit margin is wide enough to make the CFO weep with joy. So that tactical flexibility line from Mercedes chief, that's just corporate black speak for a full-scale retreat. Volvo's layoff notice, while cold, was at least honest about the price of survival. The European Automobile Manufacturers Association has already sounded the alarm. An overly aggressive EV transition has led to the loss of over 110,000 jobs in the European auto industry in the past 3 years. Once you understand this, Bentley's strategy makes perfect sense. On one hand, they shout about selling gas cars until 2035. On the other, they announced their first ever pure EV sub-UE, launching in 2027 exclusively for the Chinese market. Making a big electric toy for Chinese billionaires? No problem. But that ancestral, handcrafted combustion engine production line in Crewe, England, that's the family jewel. It's the lifeline. It cannot be touched. To protect it, Bentley is even launching the largest investment in its history, 3 billion euros over 10 years, to give its 85-year-old factory a complete electric makeover. It's like lining a magnificent coffin with gold leaf. It preserves the body, but my God, is it expensive. This spectacular, industry-wide rebellion is at its core a desperate war to defend profits, a war for survival. They are using the last golden coins spat out from their old, sputtering, internal combustion money printing machine to buy expensive respirators and life-extending pills for the high-stakes gamble of electrification. In China is the most brutal and most critical final exam hall. When BMW screams its slogan, the ultimate driving machine with one mouth, while frantically doubling battery production capacity at its Shenyang factory with the other. When Audi deeply integrates with Huawei for its software, while secretly developing a new generation of combustion engines. These 100-year-old masters know the truth better than anyone. When the Titanic hit the iceberg, the first-class passengers didn't need a blueprint for a new ship. They needed a lifeboat to get them off the sinking one, even if that lifeboat had to be built by tearing apart the mahogany furniture in their own suites. And so, all they can do now is pray. Pray that the golden rain from their combustion engines continues to fall for just a little while longer, just long enough to allow them to complete this clumsy, panicked, and undignified turn with at least a shred of elegance. Because at the end of the day, while it's always the skilled swimmers who drowned, you can't let the wealthy first-class passengers go down without at least having time to change into their swimming trunks. A poetic injustice, you could say. They turn to gas and shout hooray, the German giant's in disarray. Audi rips its memo up while BMW gives its engines love. Mercedes pushes back the date as Volvo seals its engineers' fate. Porsche sees its sales decline while Bentley redraws the finish line. In China's field, they've lost the fight, caught between the dark and light. That's all for this episode. Thanks for watching, and we'll see you in the next one.